tonight we are going to be talking about the importance of
credit files.
Oh, we have really been practicing
Yes.
this double act. Credit files. This is your gateway to beautiful debt. Now, don't freak out about the debt word. Let's just park that for a second. If you have a strong credit file, you get better rates.
Better rates, potentially better loan to values.
Yeah.
We don't want to be taking our loan to values up too high, but let's say if you're maybe looking at a commercial deal, you might get 70% loan to value instead of 65% loan to value. So that's going to end up meaning more money or less money you're actually having to put in the deal, which is a big win.
Yeah, love it. So it's really important. And even if you're finding yourself financially struggling a little, really, really try and go that extra mile to manage all your payments on time, to make sure that we are in control of our credit position.
But yeah, it's about keeping on top of that credit file. It's about making sure that you know what is there and what's seen by the lenders. And the best way to do that is to check out what information the various different credit reference agencies hold about you. Now, there are 3 credit reference agencies, 4 key ones really. So we've got Experian, we've got Equifax, we've got Crediva or Crediva, I never know how to say that one, and we've got TransUnion as well. So they're the 4 key credit reference agencies. The big 2 are Experian and Equifax. They're usually the ones that your mortgage lenders are going to be going to check you out. So I'm less concerned about the other 2, more concerned about what Experian and Equifax have on me and what information they have. Now, if you want to be cheeky and if you want to be able to, pay once but get all the information, you can go to something called Check My File, and that will kind of collate information from all of those credit reference agencies into one place for you. So if you don't want to pay for both Experian and Equifax, just pay the once for credits. Check My File.
Yeah. Now, should we explain what is a credit file?
We could explain what a credit file is. So before we go any further, in case anyone doesn't know what a credit file is, now it's what the lender sees about you and the financial information that they're going to base a decision on whether you are going to repay the money that they lend to you. So how likely are you? Now, you might have heard about something called a credit score. That's not massively important. It's more about all the information that they have. So there's going to be loads of different accounts on your file. It's going to say you had a Barclays card, credit card, and you paid every single month for 15 months that you had that card. And that basically gets you a nice big green tick with the lender, who is then saying, okay, I trust that if I lend this person a bit more money, they're going to be able to pay it back. Yeah.
So it's all about your ability to handle credit. So it doesn't really matter if you've got lots and lots of debt or lots of credit. Actually, if you pay it all on time, that shows that you can manage it. So it doesn't necessarily figure, and lots of people get this wrong, that if you've got lots of debt, that you have bad credit.
And vice versa as well. So if you've got no credit, people think, oh, I'm going to have a really good credit file because I don't owe anyone any money. The lenders don't know how you're going to react to that money if you borrow it. So actually, you're in a dangerous place if you've got nothing at all. So if you've not got a loan, if you've not ever had a credit card, the lender has no real way of knowing, are you going to pay that back on month 1? And you can still be very much mortgageable and creditable if you haven't got a perfect score, because if you've got loads of mortgage applications going through like we do as professional investors, then our score is actually sometimes dented because there are loads of searches on that credit file. Explain to the credit reference agencies who we are, what we do, and the reason that we've got loads of alerts, so our score doesn't actually reflect the likelihood of us getting finance from our mortgage companies.
Yeah. So if you go into one of your credit reports and it shows something a little ugly. Now, what would something ugly be? Maybe a missed payment
or
a late payment.
Yeah.
Late payment, missed payment, or maybe a default.
Yeah.
Or
CCJ, bankruptcy.
Yeah. Anything that's maybe an IVA, something a little bit ugly. And I would just call them little blemishes on your file. Don't panic. We're all about prevention rather than cure, but if you've already got a few blemishes in there, we can solve that. There's always
prevention first.
Yeah, there's always a solution to the problem.
So how to prevent these things? Set up direct debits ahead of time to make sure that your payments are made every single month on time.
Yeah,
that's the most straightforward way in which you can prevent any ugliness on that credit file if you haven't got any yet.
Yeah. So minimum payment, you don't need to be paying it off all the time. And again, another false myth that people have or believe is that if they clear their credit card every month, their credit file will be someone that just makes minimum payment. And that's actually not necessarily true either. So if there is some ugliness on there, don't panic. You can still make money at property. You'll just adapt your strategy. We'll change your strategy to one that maybe doesn't require having mortgage lending. And we had a student that we worked with a number of years ago, and she did have a couple of missed and late payments on her credit profile, which meant that she wasn't mortgageable for a 6-month period until enough time had gone by where the lenders were comfortable that she'd recovered and was now a good girl when it came to managing her credit. And what we did with her was just change the strategy initially. And while she was sourcing deals she'd normally buy for herself, while she couldn't buy them for herself, she then sourced those deals on to someone else and got little lump sums of cash. So there's always a way of making money in property, even if you can't buy them.
Didn't you also have a student who had bad credit file and wasn't able to buy in her name, but she had adult sons? She was able to buy in her son's name. So using effectively a mortgage host, putting in the properties in someone else's name in order to be able to get the income from that.
Yeah, family member, somebody that's maybe a deed of trust and a will can be set up around so that it's a family business. Yeah, perfect.